Hello guys, welcome to the Trading Parrot. As you can see, the price of Bitcoin has bounced from our level of support of 71.500 just by the dollar. We talk about this in the update that I published on Twitter this morning. Unfortunately, this morning I couldn't put out a video. There were some workers doing loads of noise in the house and I had to go to a park, guys, to manage to get some silence so I can put out the update for all of you guys. So I hope you appreciate that. And yes, we are still holding from that support. I'll give you an update on whether I think it's going to hold, what is the potential for this current price action to complete the full target of the bullish flag that we observed over the weekend. But more important than that, 1,000 times more important, is what I'm going to tell you about the stochastic RSI on the monthly, which is about to confirm a signal that is very similar to what we experienced in 2021. Right before the final leg up, which happened from the middle of 2021 into 2022. Since it's the end of October, there's just tomorrow left to close that candle. It is very important how we close that to understand what's coming for the remaining part of the bull market. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And yesterday's video made it to 280 likes, which is fantastic. We were very close to the 300. Remember, our long-term target, what we want to achieve with the channel is to hit 400 likes per video. Hopefully this is gonna be the one that finally gets us there so we can continue growing the channel and of course put in as many videos to keep you updated on not just Bitcoin but on altcoins as well. I'm gonna start with the short-term update on the swing trade. There is a leftover there that we haven't achieved, roughly $1,000 that we haven't complete. But if you look at what we have done already, we should already be claiming 90% of the victory. We have done a move of 6,000% since we were talking about the potential of breaking out from this bullish flag from Sunday when we saw that it was confirmed, and then the rest is history. So the question is, why are we stopping at 73.5? What is special about that price? Well, as we mentioned yesterday, that is very close, $200 away from the all-time high. So is it that we run out of liquidity and there's no motivation from taking this area? Oh, hell no, it's far from that. It's actually the opposite. We already took for the first time in all this area at the top, we hit a red area. And as I explained days ago, if we were to get into that hot zone, we should be expecting one of two things. If there's enough fuel to burn right there, we should be expecting some sort of rejection of the price. And what we are chasing for in here is to produce another bull flag to allow us to understand that we have higher chances of hitting the next red very quickly. If instead of putting a bull flag, we start breaking support, then that doesn't mean that we are done consuming the red. Hold on the horses. That just means that it might mean we might consume it a little bit later. It's just a matter of timing, I think. The only thing that can prevent us from consuming all of this, that is just a low-hanging fruit. And what a fruit. This qualifies as the largest watermelon of liquidity pools in this whole bull market coming from shorts. So unless we get a black swan event or the general markets happen to have a huge crash, that is the only thing that can stop this train to complete the full job. You can see that we could consider in here that we have already retested the breakout multiple times. We came to the point of control to give a kiss goodbye, and since then we have two impulsive moves into the 73 resistance. That resistance, we had it for a very long time in dotted white, which is coinciding with the highest close on a daily candle in whole Bitcoin history. So come on, that is a huge level to pay respect. So what we need now, the price, is to look for the retest. There has to be some sort of comeback to the scene of the crime. And we have a bunch of areas that are looking like good candidates. We have the 69K in here. we have the top of the range of the past 8 months at 70K, so 69, 70K, and a level that we discussed in the video this morning when I was in the park, which is the 71.5K. If you missed that video, that comes from the RSI 64, which is this trend line that we drew even before breaking out. We say around here, if we want to protect the chances of breaking out on Sunday, we need to put this trend line in here, and ideally we want to stay above the trend line for continuation. We did the retest at the best area possible and we hit the highs. Now we are looking for a retest, and the most humble retest, the most conservative one, the most easy to achieve was this RSI 64. And even though you see that the RSI ended up closing at 72, at some point during the day, it hit that RSI 64. That was after 1 p.m. in UK time in a candle of 4 hours. So I don't know precisely when, but we did it. We took the first fair value gap that we were talking about in the morning, and we haven't even come for the second, third, fourth, or fifth. And there are many here at stake, which is telling us that the price, the bulls are really defending their stand there when it comes to this liquidity in here. There's still appetite to hit those shorts even further. And it's not just coming from the longs. The longs want to hit that, and they've been looking for that target for 8 months. It's actually the shorts, probably the ones that are helping the most at this point in time, the longs, to achieve that, because many people that have their shorts in here are either about to get underwater, already underwater, or big in underwater, in big trouble. And a combination of these people at the moment are throwing the towel, are being forced closed by the exchanges with a liquidation call, or are starting to consider to do so. And as they are doing that, they are protecting the price and allowing it to stay there, helping with this buying pressure, keeping that as a bull flag instead of a retracement back into what should be the ultimate retest, which is 69K. If you look at this double bottom formation, no one should complain if the price comes to the scene of the crime to test and come back up. The only thing that is not great from that scenario is that it retraces all the profits from the actual breakout. But unfortunately, the price hasn't had yet the chance to do any retest. There was a breakout and just green candles. So in a way, we shouldn't really get that offended if Bitcoin gave us that move. On the scalping chart, we have short-term liquidity pools. These are definitely less important than the other ones that capture the full picture, the whole history of the 8 months. But these are giving us hints of what's going on in the day-to-day. And you can see that we are accumulating liquidity from longs here at 71, at 70K. And there is the beginning of a red area at 67, which is starting to tell us that there is a growing likelihood that we could potentially one day come and close this CME gap. It's not guaranteed. I'm not telling you that there is a heck of a extreme likelihood that we close it by tomorrow. But if we continue monitoring in the next days and the 67 happens to get too heavy in stop losses and account liquidations, we may start to put a narrative to go and hit it one day. We will continue to monitor how things evolve. Remember that the longs versus shorts is getting to an area extremely overheated. And the only way that this could carry on going higher is if we enter parabolic stage. And I'm talking not just a parabolic move on the 4 hour, but a parabolic move on the daily, on the weekly time frame. Something that we haven't seen since the early times of this particular bull market, when we just got started around the breaking the 20s, breaking the 30s, and partially also when we hit the 73.5, which was a pretty cool move of 200% almost. But normally, with normal price action, with the day-to-day, this is an area of interest for price to take a pullback. It's very overextended, and only 1% of the time, as I explained just now, we can remain there. Most of the time, that is a top, 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 and roughly around here, again, top. Megaphone pattern looks just like yesterday, guys, but every day I have to spend some time looking at this. Some nights I'm keeping the monitor on and I put some candles. I just switch off all the lights and just let the chart shine a light. It's really priceless to finally see this full artistic creation completed. And yet, as I promised you, we were going to look into the Stochastic monthly RSI. Some people are also asking me, can you look into the 2-month Stochastic RSI? In the channel Crypto Crew University, which I used to watch a lot, I love the patterns that they find there really incredibly interesting. I learn a lot from them. But personally, I stick to the traditional timeframes. I don't like this idea of trying to find the time frame that supports the narrative that you want to push out. So roughly around July, when we were breaking down in here on the monthly Stochastic RSI, right after March, when we top on Bitcoin, we were monitoring month by month what was happening with the Stochastic RSI on the monthly chart. Because we said we cannot afford to go below 20. Once you go below 20 is the end of the bull market. Bitcoin has never ever survived across below 20 with Stochastic RSI and to stay in the bull market. That is the confirmation that you are out. But as you can see in here, what we can afford, and which is very similar to what I'm going to show you we are currently doing, is what we did from March, to come back down, to pay a visit to the middle of the range and to look for another bullish cross. That bullish cross that you can see in here in 2013 and the one that you see above 20 still in October 2021 have something in common, which is to tell you that particular bullish cross tells you that there is still a little bit of steam to burn in the bull market. And that we can call it confidently a dead cat bounce. Now, don't get disappointed with this. Don't switch off the video because it's putting you nervous. I'm going to tell you good news as well. This bullish cross that we have in here, from the point of view of the Stochastic RSI, is just a dead cat bounce. It does not achieve pushing the oscillator back into the oversold area. It just roughly moves a few levels up. It gets exhausted and then it continues to the final terminus station, like in Walking Dead, I think, where pretty much everybody's gonna die. But when it comes to the price, something marvelous happens, which is you get a higher high. Okay, in 2013, right after this bear cross, which happens in this red candle, we went down 40%. But if you stick in the bull market, then you get an additional 900%. Don't get too excited. That is early cycles. I don't think we're gonna get those levels of percentage ever again. There's institutions now. This thing is supposed to move more like gold now rather than a meme coin like it used to in 10 years ago. So let's look at 2021. We have also a bull cross above the 20. So we are still safe above water in a bull market. We get the bull cross, and that was sufficient to get from this bottom to the final top 134% and a new higher high. And that is just a dead cat bounce. That's why people call this a dead cat bounce, because that's what it is. It's just an exaggerated dead cat bounce, technical. So now what we are seeing today is that we have managed to defend the level 20. Great. And we're about to end October. And let me move this forecast we did in July out of the way. And let's focus on this amazing situation that we are seeing in the chart, which is a bullish cross in formation confirmed when? By Friday. Awesome. If we can hold the price until Friday, we are going to get just one of those bullish crosses in the middle of the bull market, confirming that we have continuation, that we still have some steam to burn. Let's put back the old forecast. In the old forecast, we said we can have a bull cross somewhere in here. Indeed, we are having it slightly higher, which is even better. Of course, the best one is to have them in here, right? Still in the overbought, and then you get a perfect and clean bull market. No hiccups, just drawdowns that are huge but are invisible with this beautiful parabolic move from just hundreds of dollars into $20,000. I don't think that is going to be what we are going to see in this cycle, because we already enter in the middle of the range. We are kind of seeking for a dead cat bounce. So in my opinion, there are two scenarios that are major scenarios that have the highest chances right now. The one that has the highest chances is the dead cat bounce scenario I explained, similar to what we have in 2013, similar to what we have here in 2021. Just a move up, somewhere topping, looking like a dead cat bounce. Again, let's move the early forecast. I'm gonna bring it back because I like forecasts that stay for 6 months and then they end up playing out, so I can brag to you guys in future videos. So that hypothesis one, scenario one, is we just go slightly higher in here and we get another bear cross and we come back down into a bear market. Just doing so could give us a higher high relative to what? To 73.5. So if we were to do something similar to 2021, where we have a double top, that will mean that we just get somewhere in here, bear cross, and then we kind of burn the cycle once again with a double top. We want this dead cat bounce to get the highest possible that we can, okay? So we can get just that drawdown and then hopefully 100% up, 100% from 70K, do the math, 140%, 140K, great. Second alternative, which is more bullish, but I think is less likely, okay? That is subject to those 4 pillars that I keep repeating like a parrot. Global liquidity index printing money like crazy, thanks to monetary policies relaxing, Fed entering in quantitative easing, dollar and gold dumping big, allowing for this beast to do something similar to this V super recovery we had in 2021. In that case, the bull cross could take us back into the oversold at the top of the stochastic RSI. If we do that, sure, we can get to 100, 150, 200K, anything. It all depends on how much they print. It all depends how much gold and dollar dumps. Bitcoin is there, is a hoover of liquidity, and it will do an amazing job at absorbing all of that. At the moment, those sources are not yet available. They are moving very slow. So we need to outweigh those factors. We still don't have something that can move this into the top of the range, but we do have institutions with big greed at the moment injecting cash into the ETFs on spot. So impossible to tell whether it's going to be A or B. I'm just biased towards the dead cat bounce with a move into 80K, 90K. If the liquidity enters and any of these 4 factors, hopefully all of them at the same time, come in, then I'm happy to say, sure, we can get to the top of the range. We can go beyond 100K and a lot more. And there's a third potential outcome, which is we start dumping right now because there is a crash in the general markets, black swan event, new war, whatever. And then we open the mouth of this stochastic RSI in the next 2 days, right before Friday, and we start heading back down to a lower level. And from there, we need to reassess what comes next. So far, I'm extremely excited with seeing the bull cross on the stochastic monthly. It's extremely promising. It's in line with the seasonality of Bitcoin and also supporting all the breakouts that we've been chasing for several months. Indeed, the full year we've been looking for the breakout of the spread charts against the VIX. Extremely healthy, everything pointing up, calling for potentially another impressive move up comparable to any of these green lines that you have vertical in the chart. Against the Fed, we are well ahead in the breakout. You can see in here, we're getting to almost the final order block before we put all-time high in this particular spread chart. The RSI, again, super happy. Against Nasdaq, we finally broke out, retest, and already hit the first target. RSI pointing up, getting very close to the target of 65 that we were talking about very long time ago. We were talking about this probably July, August to hit that 65, and seeing that now we are at 57. It's just crazy. And look how perfect it looks, the breakout now. We went through a fake out as well. You're welcome to watch the history of this. At some point, we had this fake out in there. I think it was this one in mid-August, actually. This wouldn't have been because I wouldn't call for a breakout so high in the RSI. Probably I was getting bullish with this one at 50, but we ended up having it at 48. So just so a little bit lower indeed. And against the dollar, we are also breaking out. Well, we did break out a long time ago. That was in mid-October already, but all looking extremely healthy and in supporting that move on the monthly RSI. These are just weekly charts. Just careful now, guys. If you are sitting on your hands and your hands are itchy, we are in extreme greed, 77. I have been long enough in crypto to understand that entering at extreme greed doesn't make any sense. In this case, Bitcoin is just rallying. The Bitcoin dominance made it over 60% as well. As I said, in the morning, we should be looking into altcoins. Hopefully tomorrow, there won't be much noise in the flat and I will be able to put a video about altcoins. Not just reviewing the altcoins, but I want to make a video covering the dominance, doing TA on Total 3, Total 2, others, and trying to spotlight some good opportunities as well, cherry picking some coins, doing some TA, not just of the best performing ones, but possibly trying to put my money where my mouth is at the same time. Indeed, it made it to 60%. I heard that Benjamin Cowen was dropping some tears in one of the live streams while hitting the 60%. We'll talk about altcoins tomorrow. Guys, if you like to trade Bitcoin or any altcoins, look no further than Bybit Exchange. This is a top-notch exchange that has been for many years my choice for running bots using leverage. If you use the link in the description to open a new account on Bybit, then you can claim up to 30,000 in rewards, subject to volume trading in your account. You can also get the lowest fees possible. And that particular link in the description to open this account can grant you also access to all my indicators and community perks. Currently, joining the VIP on the Trading Parrot costs about £100. But if you have a Bybit account, you do not have to pay anything as long as you have enough volume traded in the account that you open with the link in the description. If you're looking for a no hassle, 5 minutes to get an exchange open and trading, no need to do KYC or anything, then my choice will be Bluffing. Indeed, I have 2 accounts on Bluffing. It took me just 5 minutes to fund them and to start trading with leverage on altcoins and on Bitcoin. Using the link in the description, you can claim up to 10,000, again, subject to volume traded. And any of the links in the description that you decide to go for, you can get bonuses, discounts, and you are supporting the channel to continue putting out these videos. I'll see you on the next one. Bye bye.